We'll call to order the Monday, March 27th meeting of the Ogdensburg Bridge and Port Authority Finance Committee. And our business for today is to review the February 2023 financials. And gentlemen, does it make sense to you if we ask Patty to highlight this statement and then we can ask questions?
Sure.
Super.
Thank you. If we look at the statement of financial position, we have regular accounts receivable at $435,000. That is 90% of the regular open AR is either current or 1 to 30 days. And then we do have our AEAS. There's no more wind turbine project for the year, and we do have a little grants receivable still out. Fixed assets, you'll notice that our accumulated depreciation is at 74, almost 75,000.
Million?
Yes. Which means we are approaching 50% of our assets are fully depreciated. The construction in progress, we will be completing all of the journal entries for construction in progress for year end and taking out anything that can be closed by March 31st. Our accounts payable, our regular accounts payable is at $354,000, which is doing very well with that. And if you look at number 3 on page 2, you'll notice that there's only one vendor who has any substantial balance, and that is Parsons. Everyone else is in the $20,000 and $30,000 range. We have been successful since mid-January in pulling in all of our accounts payable down to 1 to 30 days, so that going forward, we're going to be in a solid position. Our current portion of long-term debt, you'll see there at 510. That will soon change. We will move long-term debt to the current portion for next fiscal year. And that way we don't have to keep changing back and forth on the current portion, but that should increase for the year end also. Are there any questions on the statement of financial position?
We're still waiting on the malls app.
We will be closing those out if everything looks correct for year end. The malls F and the harbor deepening. The accounting supervisor is right now reviewing all of the entries that went into the harbor deepening project, and we are separating them back out to port expansion and harbor deepening. Harbor deepening will be straight expensed for year end, so there will be approximately $600,000 that will hit an expense account. We simply don't know if that will continue on, so we don't want to hold that in any sort of a liability account until a later date.
Thank you.
Could you review for me something I know you've gone over before, but which I don't have clearly in mind, which is what are the terms for the consolidated reserve funds with Community Bank that call for that $6 million balance?
The 6 million of that 5.8 is what was returned from the project at the port that is no more. Well, that we're changing. The rest of it is money that we choose to put aside. In there, you'll find an amount, approximately half of this year's retirement bill, what we anticipate it to be. We're collecting the money to pay our portion of the Chrissy grant. Next piece that comes in, there are items like that that are being held so that we don't accidentally spend the money. And then we don't have the money to pay some of these obligations that we have upcoming.
Would I be correct in understanding that that's not an obligation to CDNA, but instead a prudent plan for cash management that the authority is following.
Yes,
Okay,
that is all our money, but we choose to put it away so that it's not readily available.
and I think I'll leave further questions for another time.
Okay.
Yep.
Any other questions on the statement of financial position?
Just the Parsons thing is the bridge, that's the bridge, correct?
The bridge
Bridge inspection.
Inspection.
The one invoice is about half paid, and we just got a brand new invoice for the section 3, is it?
Mhm.
Yes.
It's underwater this year?
Hmm?
Is there underwater
No,
inspection this year?
No.
under this year, yes.
This year,
This year, not last year.
right.
Yeah.
So if we move to the budget to actual, our bridge revenue, our tolls are approximately $188,000 above budget, which is wonderful. Our rent is about $79,000 over budget, which has just brought in some additional income. We had the trains that were parked out here for a period of time. We had some truck rentals that we hadn't anticipated that came through one of our Commerce Park vendors, tenants, and a few things like that. Our airport revenue, our parking and car rental are above what we anticipated. Our dividend income, we did not anticipate any at all. And because the interest rates have increased, we have a bit in there that belongs to dividend income. And dividend income comes from the bank account that holds the bond for the airport. Our fuel sales, if you look at our fuel sales and then our fuel expense, we are currently at approximately $85,000 profit on the sale of fuel, which probably works quite well into the $1 to $1.35 a gallon that we add to our cost. The industrial park campus revenue will remain a little under budget for the end of the year. We had the transition for building 11, and we had the one tenant in building 1 who broke their lease, well, defaulted on their lease. So that money we did not get for the rest of the year. Marine.
But, excuse me,
Yes, sir.
but in February, we're actually above budget on revenue. Is that due to the changes you made, Anthony, over there and leases and everything?
Yeah,
Direct change. Yeah.
that represents the team's alteration in strategy moving forward.
Good.
Our marine terminal, we had a few extras, things that came in. We had the steel that came in, the replacement blade. We also have the marine terminal receives the interest on the return funds. So while it's really not theirs, they do get the interest credited to them. The railroad revenue, easements had never been included in the budget before, and I think because we have some that are somewhat substantial, we should consider putting them in for next year so that this doesn't look so skewed. Plus our actual annual rail car invoice was about $5,000 more than we anticipated. And our wind turbine revenue, we had the third windmill project. Our salary and employee benefits, we did not hire a general mechanic this year. And we had the period of time between the account clerk and the senior accountant leaving and another one coming in. So the salaries are down, which in effect brings down the benefits. Our maintenance expense, we did not anticipate some of the salt that we got, which is part of what has brought us over budget there. We had Barrett Paving come in and do some repairs for us at the curve on the end of the Vacus building. I believe that was what they were here for, yes?
They supplied the asphalt. We did the work.
Yeah.
Yes, you're correct.
And US Ecology, we budgeted for, but it came in a little higher than we budgeted. That is for the spill?
Yes.
Yeah,
We've had in monitoring wells and everything from a spill from that we need to, we've had to test for, so we know if that has cleared up. And so we've tested, and it has, but there are some areas that need to be defined in case we need to go in and remove some of that soil.
our general expenses are below budget. Our insurance came in below budget. I think that has a lot to do with our change in broker. They were able to get us a few good prices, and our maintenance agreements are under budget. The airport salary expense and employee benefits, we have been now since October without an airport manager. So we are seeing that below budget status for salary and benefits. Maintenance expense, we ended up purchasing a great deal more New Deal de-icing than we anticipated. And our auto budget has surpassed our auto expenses have surpassed our budget.
What do you mean?
Our budget for auto was approximately $55,000, the budget, and we have exceeded that.
Is that for repairs?
And fuel.
Oh, that's right, and fuel for the
Yeah,
equipment.
that fuel is separate, or the fuel out there
Okay.
is what they use, diesel and gas. So
Depending upon the weather.
exactly,
Yep.
you pump a lot
Yep.
through those machines.
Got it.
Our general expenses, our Leo is spot on, but our MAPCO and professional services are above budget, and our insurance is a bit above budget. I think part of that has to do with the bridge expense being below budget, that it was not split out properly when we split it out to all the different areas.
Do you have detail on something that's just for MAPCO?
Yes,
I mean, if I ask for any expenses related to MAPCO, you can print that
Monthly,
out for me?
yes.
we can print them out.
Would you do that for January, February, and March, so I don't need it until April?
Okay.
Thank you.
We have not received the income we had hoped, even though we are above budget in parking. We're still having to underwrite a great deal. We're not up to where we were pre-COVID. I believe MAPCO was bringing in over 250,000. Well, parking was bringing in over 250,000, and we're nowhere near that yet. The industrial park, the salary expense is higher as the director of economic development has put more time there than I had the ability to do. Utility expense, we budgeted net of tenants reimbursing us instead of gross, which we should have. Marine terminal salary expense is below budget. We've had 2 retirements this fiscal year, Neither has been replaced, although at year end, we will move the temporary, the county clerk who's down there, we will move her salary out of bridge and put it to the marine terminal, as that's where she is her entire year. Maintenance expense is above budget. The fuel was much more than I thought it would be. That we've spent more than we thought to Southworth Milton on the new cat. We've had to buy filters and certain other things from them that we didn't anticipate having to purchase right away. Both heating and regular diesel fuel for the equipment were above budget.
Wouldn't that come with warranty?
Not filters, they're consumables. So when you do a 250 or a 500, and it's way pricier than it used to be. You're more technically advanced things. But,
Have we moved more salt this winter down there than we ordinarily would? Is that why they're
yeah,
spending so much on
with those,
fuel?
you get fuel costs with generating income by moving the salt,
Right.
like relocating, or also we had those added to products there at the end of the year. We moved most of that one product and then the other one
entirely and then half of the other.
Yeah, so with that, there's a expense with that, but also it's reimbursed through the income side. That you can't budget. We couldn't see that part. So when you say, or when Patty says we're over for maintenance expense, you don't have any insight when budgets come up, what kind of influence that'll have on your overall budget. You kind of throw a number there to try to
Right.
corral everything based on what you know.
So the expansion of the dock, would that make it less activity regarding moving that salt around?
You'll put it in place and all you do is shape it and cover it.
Okay.
Whereas, really that long pile, that right where the dock's going, that whole pile that was there
Right.
to begin with was all relocated by loaders. So it's what we're supposed to do, but you would eliminate that completely and just you'd go down and you could make any size pile you wanted and shape it and then you cover it.
Just another reason why it's important we get that dock project done.
Yep.
General expenses at the port, we've been quite lucky. Nothing has been over budget this year down at the port, so our general expenses are under budget. Legal expenses, we had not anticipated any for the marine terminal this year, but we had the splitting of the harbor deepening port expansion. And you'll notice at the bottom, we've moved up a little bit on our principal payments on loans, which we should, and the OBPA portion of projects and capital.
We have one more month left in our fiscal year.
One more, yes.
That's it, isn't it?
That's it for
Okay.
that. Any questions on that? I did send you all a little summary of our fixed assets and accumulated depreciation on Saturday.
Sam, what was something that was of interest to you? Did you have any observations or questions?
I was grandpa babysitter over the weekend, so I didn't even see it.
It's good to know, even though our depreciation is really a paper figure,
Right.
but as we get closer to things being 50% depreciated, it's a time, if we have the funds available, where we should start being cognizant of putting some money away to buy new equipment, new trucks. All our vehicles, except for the brand new ones, they're all fully depreciated. All of our furnishings and fixtures are completely depreciated. Our signs, the sign at the airport has, I think, one more depreciable month, and the sign here at the bridge has a couple more, and that will be completely.
Does the authority have a formal plan for capital assets?
You mean for replacement?
Just an analysis, a plan of it, as opposed to cash being set aside.
No, Patty schooled me with a lot of this morning, which in a financial way backs up what a future plan should include. Because I'm nowhere near what she is financially. So
Sure.
when you bring that number to what I think needs for replacement, it just correlates perfectly with that.
So we do know that there are things, vehicles especially, that we do have to address.
Well, I have been educated a little bit on that. When the Morristown Village dissolved, one of the tools that New York State really wanted us to do was a capital assets management plan. And so they 80 or 90% funded a study by Danick. And the methodology, is this stuff you're familiar with? You must see them.
Mhm.
And you are.
Sort of, not in the way you're talking.
Their methodology is to take every piece that we have in here and give it a life, useful life, and say, okay, you're halfway through on this one. So you're gonna need, let's say it's a plow truck, $225,000 in so many years. So for this one, we're gonna plug in 40,000 a year for the next.
Right. To get up to the replacement cost.
And then you take the bottom of the column when you're done and say, okay, this is what ideally you ought to be putting into cash reserves every year. And
Wouldn't that be nice?
well, I know that the authority has trouble with that, but there's a real difference between what the depreciation would show for some specific items. The general idea might be, it might still give you a pretty good number, but like this chair is full, I'm sure fully depreciated, and it'll be good for another 50 years.
Right.
It's a great chair.
Exactly. I mean, and I don't know why they did it, but they even got, back in 96 and 2001, they depreciated file cabinets, which are not a fixed asset. But a file cabinet will last you 20 years if you don't beat on it.
Yeah.
So we know that we don't have to replace those in any hurry. It's the bigger things like the pickup trucks and the trucks with the plows that we have to worry about. My plan, and Steve and I talked about this, that it would be great to get 1 to 2 trucks a year, so that when you get to the end of the trucks we have, then you can start back over. And if you have to lay off a year or two, you have a plan because they're staggered purchases.
Yes, exactly.
And we can keep them as current as absolutely possible.
Well, I certainly would like to see a list of, let's say, the 20 biggest wear items that you've got. You know, I don't mean to suggest that,
Other than the bridge,
Yeah,
yeah.
that might skew it a
I
little.
think
it does.
we just need to plan adequate maintenance on that one. We're not gonna replace it.
No,
But even if you didn't do a whole multi-page item,
Yes.
and then you could put in a plug for the rest of it.
Mhm.
Because I think you can anticipate But there'll be some big purchases, and whether it's next year or 2 years or 5 years or 7 years, might be nice to be able to see it coming at you.
Yeah, I would say the last 10 years, nothing's been planned. It's all been reactive. It's all been reactive
Sure.
due to lack of,
Yeah.
monies that was planned ahead. So,
Enough said on my part.
Yeah, as you see that accumulated depreciation figure keep going up and up and up, you have to think about what is the real value of what we have? And we have to consider, I think, and you talked about it, replacement value down the line. It's getting to the point where we do need to put something away and look out 10, 15, 20 years. So,
Well, the organization will not be viable if it simply funds operating expenses.
exactly. In 2050, we want to get a new vehicle for Anthony.
Right.
And that plan is a segue into the cash flow that I also sent you
Yep.
on Saturday. There is not 1 month that is positive.
Thank you.
With the income that we anticipate, with the normal expenses that we have, and this is quite representative of what we anticipated, this would be half of our next year's.
And the second to bottom line, OBPA grant portion and capital expense. No, I'm sorry, all debt expense
Mhm.
shows a heavy number for July. What's that?
Our Wilmington Trust, in July, we pay interest and principal.
Mhm.
In January, we pay interest only.
Sure.
And our,
So that's the annual principal.
and interest on that bond.
Mhm.
This is the second year that principal payment has been over $100,000. The first was a long time that bond has been in effect, that we've only been paying $15,000 or $25,000 toward the principal. And last year was the first year we had to pay much more than that.
And when you say bond, is that the one that funded the bridge many years ago?
Mm-mm.
Or the European airport?
Airport.
Airport.
It's the term expansion, 2016 expansion.
And as you show these projections of expenses and debt service, are any of those going to be funded from that reserve fund that you've identified as CBNA reserves?
Likely no.
So did you pull those out of the expense projections?
Yes.
Yeah.
It's all right there. The only thing we have done is we did pay off the Tompkins term loan, and we have brought the line of credit down to 0. But if we use it, I've left those amounts in there. If we use it, we will have that to pay back. So it was sort of what we've paid off, I've left to show what we might be taking on that line of credit this coming year.
So I need to chew this over a little bit so that I can appreciate it. The CBNA reserves are about above and beyond the funds that will return
We have,
About 6 million was that.
mhm,
Yeah,
So above and beyond the, I think 5.8 of that is money that,
so we have
Yeah,
about
yeah.
7, yes.
so we have about $700,000. And that's stuff that you've set aside intentionally, and what does that apply to, that you've reserved?
We have half of the retirement, which is approximately 125,000 is in there.
Yep.
We have 125 of the 177 for the Chrissy grant is in there. We have railroad reimbursed expenses, approximately 80,000, that is simply being used to pay the new railroad expenses until we can get reimbursed as we go down for the Grass and Ragged River.
Yep.
We also have, what else do we have in there?
Well, these are good examples. So if I understand you correctly, you have not included the retirement costs in this chart.
Retirement will be under payroll and benefits.
Right.
And that you will see in, oh, you won't see it because it's in December. That we will see that.
Okay. So
So we would, we
so
would
in
include-
December, you'll take into account that you already have the fund set aside.
Right,
Won't
right.
go in, yes.
So we would have that under other income for December.
Yeah.
We would put in what we have set aside for that to offset the expense for that.
So that's the big lump. in
Yes.
that piece, and I'm calm.
And I've explained to you, we're using numbers that are conservative and real.
Yep.
And I don't want to be foolishly optimistic here. So that, so it's not going to solve everything,
Yes.
but it's like, that's as conservative, we're not a lot of these numbers, I believe, might improve a little bit, but it's not to the point where it's going to solve everything. But I just want you to know there's nothing in there of grand thinking there's no wishful thinking in any of these numbers.
I was just trying to make sure that we weren't taking expenses twice, if you will.
Sure.
No, correct.
right.
And I don't think that that's been done. Do you have any questions or comments?
No,
Do you have any sense of what options the authority has to deal with this?
We have a few things. So there's a number of things that I can't talk to you on camera, but
Yep.
there's some things that I believe they come through, they'll soften a lot of this. There's more activity possible at the port that, I can't say how that'll turn out, but surprisingly, there's more interest in some future projects. And then we do have some interest in property sales, and we do have some other interest in leasing some of our properties, but that'll be for the board to decide.
Sure.
And I can inform you more on that, but a number of them are negotiated. And then the timing of them, I don't know if they'll be part of this year. Some of them there, but long-term they may be. I would say that would be a good description of some of that.
well, we were upfront with this coming fiscal year's budget on where we may be at the end of that year. And we also said, we keep working toward lowering that number, that deficit number. And I think, as Steve just implied, the staff is constantly working on it. And I'm hoping we don't end up with twice that number we're looking at here in red at the end of the fiscal year. And it's a lot better than 3 million.
I don't know whether I understand the situation really correctly. If I were looking at this projection of running short on cash, I would be speaking to my lenders and saying, I don't think that I am projecting the ability to pay principal. And I would be going to my legislative representatives and saying, we do not have the capacity as we look forward to keep operating at this level and also to pay principal. And we need access to credit. And as a board member, it feels to me as if this is the kind of information that the board should know. And I try not to be governed by oughts and shoulds. But it seems to me as if that we have a responsibility to the board to address this.
Absolutely. And like you said, we gotta think, it sounds like there might be a plan, but the creditors, we should be talking and see what other options, we should be preparing them for options, right?
That's right. And I think that what this organization does is so important that I would look for them to help figure out ways for this to work. Because so much of this grows out of the slowdown from COVID. And we've received great help from the federal government and emotional support from the state. But I would ask the state for monetary support. And I don't know that it is available, but I think that we need to ask.
I think you're absolutely right. Again, which is one of the reasons why we were upfront with what we're facing
That's right.
this next fiscal year. They know, they're well aware. I don't know if they're waiting to see just how we're going to end this fiscal year. And then we can have that discussion regarding the fiscal year that starts in April. I don't know. They're doing the budget, state budget right now.
Yeah.
But
Probably it's appropriate to wait till the state budget starts. But they are savvy people. They will understand whether they are supportive or not.
Right.
They will think this is better for us to tell them no than for us to come to them
Yes,
in August and say, in the next 30 days, we've got to have such and such.
right. Absolutely. So why is this information so useful?
Yeah, right. Anyway, I really appreciate the work you've done on this and I think it is useful information. And I really regret the way that this sounds like a reprimand to the staff in some ways. You guys have done great. But the authority has been in a position that was not viable.
Yeah.
And so we need to do what we can to keep it operating. I know that creditors and vendors and so forth have a good deal of patience. And in particular, bankers and financial people will know.
So it's hard to lose $4 million as a result of COVID on bridge revenue.
Yeah.
That we'll never make up,
Right.
never, and not show it in our bottom line as we go through the year.
Yeah.
Through no fault of ours
No.
and everything we've done, to show this is what the issue is, that not every state agency had to deal with, like we did. But you're right, it's time to say, listen, this is the way it is, that we had no control over. We've done our best to minimize it. We're just looking for a little help.
So I think really, Sam, this ends up in your lap in a lot of ways.
Oh, thanks.
And I would guess that there'll be a significant year-end report before the accountants provide their audit reports. And that probably we need whatever is significant as soon as we can get it.
Mhm.
So if it is, let's say April 15th, before you get a year-end report from the staff, is something like that possible, Patty? That you'll be able to
Not by
run
the
a,
15th.
like a typical March, end of March summary?
Probably the first week in May,
May.
we could discuss it.
That's what I was thinking.
You have to hold so many accounts open
Yeah,
so that we can get all our
so
invoices in.
probably, if I were in on it, Sam, I'd take the end of February report and I'd go say, look, guys, here's what we have and here's what we see. And not wait.
You're talking road trip in April.
Yep.
Are you still meeting? Are you sure? Are you still having a meeting?
Yes, we'll be out of here in a few minutes.
So anyway,
No, you're right. You're absolutely right. It needs to be discussed, where we are, what we're trying to do, and what we're asking for sooner than later.
sure.
Yeah, of course. I agree.
Any more discussion?
No,
Okay.
I have thoughts, but I'm just not, I don't have them aligned yet. Just trying, and the reason I'm just thinking, is there somebody you can ask to help you prepare that? Who would be good here now? Is there- I assume that our legal counsel can help us a little bit and some of that to be prepared for what we need.
Yes. Yeah,
I don't probably have anything, yeah, just talking, so.
I might need some chocolate milk and quart containers or something. Maybe that.
I know.
That's very.
You know
that.
Once you know that, it's very convincing.
But it's a good point, Chris. Thank you.
Is there any other business for our meeting this afternoon?
I don't believe so.
I'm good.
I'm good.
Move we adjourn then.
I'll make that motion. You second it.
Meeting adjourned.
Thank you.